please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. A couple of stocks are looking interesting. Just pull out the intraday chart of Sun TV and also Jet Airways. Both these stocks trying to make the highs of the day. So interesting bit of mid-cap action is what you're seeing. That's Sun TV for you, moving to high point, and Jet Airways as well. Not quite at the highest point, but trying to make a move over there. On the other hand, JP Associates has moved to low point of the day. Prakash, Gaba and Mitesh Thakkar with us to tell you what to buy or sell today for a reverse trade tomorrow. Mitesh, you go first. Thoughts on index and your stock calls?
Yeah, so I think there's nothing new to add on the index, to be honest. I think it still remains, subdued and quiet. On the stock side, Equitas has recovered very strongly from the day's low. So you take that as a BTST with a stop at 148.5 for targets of 155. And we had a sell call on ACC at 230. I think Ultratech Cement, the intraday charts are also turning negative. So take that as a STBT call. Keep a stop just above 40.90 and look for targets close to about 39.80.
Okay, so Mitesh doesn't like cement, at least for now, for these two calls. Okay. Prakash, let's get your ideas as well. Last half hour, buying or selling?
Buy.
Okay.
I think I'll go with Sun TV. Yes, that's certainly looking good. Good base formation. Up move started. The momentum can take it to around 890 zones. Stop below 870 should be fine. Supreme Industries, another stock, has already moved up a bit, but it can still climb to around 1330 zones. Again, stop below 1275 should be fine on that.
Okay, that's a few, of course, calls that you can work with for BTST. IDFC, in fact, is now moving even more. That stock is up about 5%. Nalco is up 3%. So Nalco making a bit of a move. Amrish, Nalco, you reckon the massive move, then a sharp correction?
Yeah.
Thoughts on this one now?
I mean, like the way metals are moving, I think one can remain with stocks like Nalco and Hindalco possibly for the next a month or two. But then I feel that the major movement in metal, both aluminum and steel, I mean, what we have seen in the last 2.5 years, I think it's more or less, I think it's topped out.
Okay.
But then I think this is a temporary move which could possibly last for the next couple of weeks or maximum of 2 months. Utilize that and exit.
Okay, Amrish, what did you think of Syngene? This stock is reeling under pressure, 5.5% lower. We're expecting numbers from Biocon as well.
Right, but I've not really tracked Syngene, so.
Okay, any thoughts on Biocon?
Biocon, I think, I mean, like the underperformance which you have seen in Biocon in the last 5 years, I think it has clearly come out of that in the last year and a half. So any sort of correction possibly I'll utilize to buy Biocon.
Okay, so the clock turns 3 and okay, there's absolutely nothing which is happening as far as the index is concerned. Still 10,590 is what we have on the Nifty and about 24,937, 943 is what we have on the Bank Nifty. Just want to perhaps observe for a bit more before we move on. Okay, now it's picking up a bit, 24,957 and 10,596 on the Nifty. Let's just see some stocks intraday. Of course, TCS is the one which has been a strong stock. Lever has moved to high point of the day. Lever has been quite strong. ITC is moving up a bit. Coal India, last expiry as well. Coal India made this big intraday move at 3 p.m. Let's pull out that stock. That's ITC, by the way, moving to the high point. Coal India moving up a bit. 291 is what we have on Coal India at this point in time. So it's about individual stocks that we are seeing a bit of a move. HDFC Bank is now powering the Bank Nifty. Okay, now just pull out the intraday chart on an HDFC Bank, and that's actually taken the Nifty past 10,600. So now that 3 p.m. move is taking effect, entire day we have spent Surabhi in this band, and essentially, this is of course shorts also giving up, but 10,604. Just look at that move now, and on expiry day, that is. Especially if your entire day you spend like this, that's what happens at 3 p.m. essentially, because a lot of big stocks make big moves, and that's what's happening at this point in time. Hero MotoCorp, just pull out that stock intraday, that one also making a bit of a move.
Absolutely. Reliance has been very, very volatile, but largely I think ITC is within the big one. Banks we've been speaking about as Anuj is pointing out, and HUL also piling on a little more gain. HCL Tech, maybe we can just get HCL Tech, because there also we're seeing some addition. So Anuj, all things being equal, I mean, if this is how it plays out next 25 odd minutes, we again get a close above 10,600. So maybe frustrating, yeah, because you're not breaking the range, but that's what it is. We're just in the range, right?
That's what it is. Doesn't change anything. It doesn't change anything, and that's what, you know, there was no breakdown yesterday. You know, what essentially the market did was it moved into the lower side of the band, and today the market is moving to the upper side of the band. The band has been really 10,550 to somewhere around 10,620, 630, give or take 10 or 20 points here or there. But apart from that, nothing really in terms of overall move. But Amrish, so how much longer for this band, and your overall call on the market now? Because we've had a good series.
Yeah. I mean, like I told you earlier, I think the downside which we were talking about earlier, I think that is not going to be there, going ahead. So I think the base for the market as of now is about 10,100, 10,200. But then after this sort of a bounce which we saw from the lower levels, it is not possible for the markets to again continue moving up to that 11,000 levels, because in between clearly we have that elections of Karnataka, which is very important. So I think we will see a decisive move only, I think, post those elections. Till then, I think we will clearly see consolidation happening, because whatever said and done, those worries as far as rupee and oil continues. But then we are seeing that the earnings are better, macro picture is slowly turning better for India. So I think the way the money has been coming in earlier, which had stalled for a while in between, I think that will again continue going ahead. So, I mean, at this point of time, I'm decently bullish on the markets, but then I would say that for the next month or so, or at least the next 3 weeks, we will see a consolidation between the range of 10,200 to about 10,650. And in case of any sort of a correction in this range, I think should be utilized to buy and, I mean, get fully invested, I would say.
Okay, by the way, look at the moves in some individual names. Just pull out the intraday chart of CG Power. That is, of course, one stock which has had a decent series, but just in the last 5 minutes of trade since 3 p.m., that is the move that you're talking about now on CG Power. This is the expiry move, Surabhi.
Yeah, so, and absolutely. I mean, that's a vertical jump on that stock. The other one, which was looking a little erratic, is Infosys. At HCL Tech, of course, we saw the buying emerge just a while back. Maybe you can get the intraday chart of Infosys. That's the question, Amrish, to you as well. Now, TCS, Infosys, and of course the smaller peers. Something like an NIIT Tech, even today, is about 4% higher, despite the whole run-up. What would you buy in IT? How do you add that to your portfolio if you've till now been a disbeliever in the whole move?
In fact, I was not really a disbeliever in IT. In fact, I was doing contra buying close to a year back. I mean, if you go back and check, I've been saying it's surely a time to buy the leaders. So, in fact, I was buying Infosys, I was buying TCS. I've added HCL Tech to that. NIIT Technologies, though I had picked up earlier, I exited early. I mean, I'm totally out of NIIT Tech, and I've lost that move. But then these are the 3 stocks which I think one should hold in the portfolio.
Okay, Amrish, we thank you on that note. Right. Thanks a lot for joining us. Some stocks are really making a big move now. The one that stands out, of course, from the index, we spoke about Coal India as well, and in the mid caps, CG Power. These are 2 names where we are seeing big moves. What else is moving?
Reliance, Anuj. Sorry, yeah. I just looked at that. It was breaking down when we started the show, and now there's a bit of a resurgence. So.
Yeah, but so Reliance is making a move. Prakash, quick thoughts on Reliance?
Reliance certainly looking good to me. I think Reliance is heading to levels closer to around 1,000 zones. Matter of time. A strong support on 965 zones. I also like SRF, Anuj. See if you can see that. It's looking up good. 2,260 strong support zones can go 2,380.
Okay, look at NIIT Tech. I mean, ending the series right at the highest point. Just pull out that stock intraday once again. Havels is moving to high point. So Hero MotoCorp, JSPL has moved to high point. Just pull out that stock as well intraday. Manappuram Finance. So a lot of these stocks moving right now. ONGC has made a move above the 280 mark, sorry, 180 mark. So that one is making a bit of a move. Adani Ports, Godrej, TCS, of course, all these stocks making a big move. Let's do one thing then. Let's get some more market opinion. Earlier in the morning, we spoke with Mihir Vora, and here's his thought on the market action.
I'd say we should see some kind of consolidation. We have seen quite a lot of volatility in March and April, both on the downside as well as upside. But now with the results season on, I guess the markets will digest the earnings numbers for the next few weeks and then take a call going forward.
What did you make of the IT earnings that have come out so far? It's been a mixed bag of sorts. Best in class, of course, has been TCS so far. But your own thoughts on how to approach this space now?
Yes. So in IT, it's been an interesting ride over the last 3 months. While numbers have been mixed, as you mentioned, there have been some positive surprises. But I think the bigger driver is the fact that the US economy seems to be doing better than what was expected. The tax cuts which are coming through is leading to expectations that corporate America will up its spending on IT and other investments, and that's the reason why we are seeing a good trend towards IT stocks. The other factor driving is the fact that rupee has weakened, and it looks like the dollar index globally seems to be on a rising path with rising US yields. So that again is adding to the momentum in the IT sector. So what we have done is we used to be underweight in the segment, and now we are a little overweight, not very heavily overweight, but now a little overweight on the segment.
On IT, and what exactly you think is happening right now? Is it just a case of, I mean, there was some valuation catch-up which happened, of course, but of late there's been massive buying, and especially mid-cap ITs, stocks like Tata Elxsi, NIT Tech, Mindtree, they've doubled over a period of 3 or 6 months.
Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I'm very, very pleased to share with you that this quarter and this year ending has been a year of significant milestones in our life cycle, which is almost closing into 14 years. This is the first time that the bank's total balance sheet has crossed 3 lakh crores in total assets. The first time our total deposits have crossed 2 lakh crores, and is also the first time our total loans as in advances have also crossed 2 lakh crores. And there is one very important adjacent development, and you will recall roughly about 3 odd years ago, we were the first bank to commence business, international business in Gandhinagar at the International Banking Unit in Gift City, roughly about 3.5 years ago. I'm very pleased to report to you that that unit has also crossed $2.5 billion in total assets. Actually, it stands at $2.8 billion. So this year, fiscal ended 18 has been quite a record in many, many ways, and is a stepping stone towards Yes Bank now evolving as a meaningful large bank, a large home country bank in our country, India. I do want to mention that the growth has come not only from our corporate businesses, but there has been very meaningful contribution by MSME businesses, by retail, and I will dwell on the numbers in a short while. I also wish to emphasize that in the overall scheme of things, that bases the growth in a fairly challenging year with a lot of tailwinds now accreting, but there were headwinds in the former part of the year. The bank is of the view that we can continue with sustained growth at least for the next 2 years when we complete the first phase of our large bank phase. Our asset quality, which as you know, for more than a year plus has been top of the mind in the banking system, has demonstrated significant improvement. It's amongst best in class, I think in the top 3 of all private and public sector banks included. Our gross NPA has improved sequentially from 1.72% to 1.28%, and net NPA has improved to 0.64% from 0.93% sequentially. Credit costs for the year has been contained at 76 basis points against some market forecasts that were expecting this to be north of 100 basis points. I'm very, very happy with this outcome and delighted to share that in a very, very challenging year, we have been able to contain this and not compromise whatsoever in our P&L as well as balance sheet growth outcomes. The bank continues to be in a leadership position in the digital space. We have been ranked number 2 across all public, all private, all payments and foreign banks by the Ministry of Electronics and Information Technology for the year ended March 2018. And this is also a reflection of our strategy, which is being implemented on war footing to become more and more of a technology company in the primary business of banking. And that's something that we are pushing as part of our Future Now strategy. I now want to dwell on some numbers in more detail. Net profit for this quarter went up 29% to an overall of 1,179 crores. And for the year as a whole, it was up by 26.9% to an aggregate of 4,224.6 crores. So definitely a record year for our still very young bank. Net interest income for the quarter grew by 31.4%, and for the year as a whole grew by 33.5% to a level of 7,737 crores for the fiscal year ended March 18. NIMs stood at 3.4% for the quarter, but for the year as a whole, they were at 3.5, a slight improvement over fiscal 17 from 3.4 to 3.5%. Non-interest income for the quarter sequentially, year-on-year rather, grew by about 13% to 1,421 crores, and for the year as a whole stood at 5,223 crores, representing a year-on-year increase of 25.7%. Of this, corporate trade and remittances, cash management grew 100%. It was a 100% increase in what we call very, very core non-interest income. And this is despite the fact that the year 17-18 had very nominal bond gains, product penetration across the board, and very, very core penetration, which to me would be classified more as annuity income and practically nothing which is one-off in here. Stable cost-to-income ratio, a growing bank, it's important that we keep our eyes on cost control. For the quarter, cost-income was 40.3, and for the year as a whole, it was 40.2, somewhat better than fiscal 17, where it stood at 41.4. So an improvement of about 1.2% year-on-year as far as cost-to-income is concerned. The overall productivity metrics are reasonably satisfactory, with ROA at 1.6% and ROE for the quarter at 18.8. For the year as a whole, ROA was 1.6 and ROE for the year as a whole was at 17.7%, despite a capital raise just about a year ago towards the end of March 2017. The book value of our share, the 2 rupees share now, is at 111.8. So it would have been approximately 560 rupees for a 10 rupee share, but now that we are at 2 rupees, it's 111.8 rupees. Balance sheet numbers, some I have mentioned. Overall total asset growth of 45.3% year-on-year to a level of 3,12,445.6 crores, with the international banking unit growing year-on-year by 166% to a level of $2.8 billion, as I mentioned to you. Deposits year-on-year have grown by 40.5% to a level of 2,738 crores. CASA year-on-year grew 36.5%. It stands at 36.5% on the back of 41.1% year-on-year growth, within which SA stood at 44,000 crores, 44,350 crores. CAS stood at 28,826 crores approximately, representing an increase, strong growth of 35.3% in savings accounts and 51% in current accounts. So overall, this has been a very satisfactory year for core fundamental CASA growth as well, with CASA plus retail now aggregating to 57.2%. On loans and advances, the bank has grown by 53.9%. So this is one of our record years on a slightly larger denominator, to now a level of 203,533.9 crores. And this is, as I mentioned, on the back of fairly consistent growth in corporate, MSME, and retail businesses, with retail alone, the core retail growing by 99.1%, and now retail core stands at 12.2%. And I will also add to that the MSME number. So in aggregate, we are roughly about now at 32% as far as branch banking loan assets are concerned. So we are practically now back to pre-GST, pre-demonetization levels as far as retail growth is concerned, which is a good signal. And naturally, in future quarters, these numbers will stack up even better. In terms of composition of our loan book, the corporate businesses, and as I've reported to you in the past, that these are spread over 8 different kinds of corporate businesses, and they in aggregate constitute about 67.9% of our total, and within that, 7.1% is our IBU assets in Gandhinagar. Retail and...
Okay, that's, of course, Yes Bank. Just look at that move on the stock, phenomenal. And one more stock that you should look at right now is Axis Bank. Now, it's really interesting because through the day it was down quite a bit. In fact, went to as low as 480. And just look at that move post 3 p.m. This, I mean, along with the move on Yes Bank, of course, Kotak, and all of that has propelled the Bank Nifty well past the 25,000 mark. In fact, 25,020 now on the Bank Nifty. The Nifty also now up 50 points at 10,620 is what we have. Advanced decline also looking quite okay right now. I mean, it's still in favor of the declines. Essentially, again, just to reiterate, Surabhi, this is an expiry move. And tomorrow when you start trade, the reference point should not be 10,623. It should be somewhere around 10,590 because, the last 40-minute move that you've seen is essentially on account of that. Through the last 3 days, you've seen a lot of option selling and, most of the options almost became zero. And then at 3 p.m., just, one big punt on the index and on individual stocks. Of course, earnings have helped, Yes Bank's earnings, but I mean, Axis had no business going up like this. That is essentially the short covering ahead of results as well. That from the low point, the move that you're seeing now on that one, because now it's a bit of a consensus, right, that Axis Bank will perhaps come out with bad numbers. So from 530 to 490 on the stock, and now that stock is also rising.
I guess, but yeah, what if they don't? So maybe some of the bears want to cover their shots and don't want to go in that fashion in the event. By the way, SBI Live's numbers came out. I figured out one number, and that gross premium growth number is very strong. They've done about 25-26% in gross premiums. So that is good news. Their renewal premiums are up about 31-32% in the quarter gone by. So that's also good. But still don't have that number on the margin, which is what really caused the big spike for ICICI Prudential. So still waiting by for that. Right now, that stock is a little flat. Fiery fireworks on the street, and really the stock of the moment has to be Yes Bank. But there are others. For instance, the move on Reliance has definitely helped the Bulls case. We've got Prakash Diwan joining in on this leg of the show. Prakash, Yes Bank, almost 10%. What did you think of the numbers and what's the stock call?
Yes.
Yes.
I think the numbers are phenomenal. And if we start reading this turn of events for Yes Bank to be so favorable for all the corporate banks as well, or some of the corporate banks, then I'm sure ICICI Bank, Axis, Kotak has of course been looking very promising, but these two banks will start looking very favorable as well. So I think what Yes has done is it set the bar higher. And if they're looking at fundraise, you can imagine, I mean, even at current levels, thanks to the last round of fundraising, they're still available at less than 4 price to book. 3.8, 3.7. So it's still not out of reach in terms of valuations. So I think people will want to reset their estimates, and you will have a lot of upgrades coming in tomorrow morning.
Oh yes, $1 billion QIP as well. Prakash, hi, good afternoon. So that's of course on Yes Bank. Where does that leave the pecking order? And I'm talking about this after the move that we've already seen today, of course.
Yeah, Anuj, interesting. So I think ICICI Bank, given all the tailwinds that we've seen unfavorably, so would probably also start featuring in a lot of buyers' list, given the fact that if Yes, and remember, focus on Yes has been not only the large corporate accounts, but it's SMEs as well. So all these banks would have to start reorienting themselves, and if that happens, I think the pecking order would be first is Kotak. I mean, I love Kotak Bank, the way it's assigned its product mix to so favorably. The second would be Yes Bank, and the third would be ICICI. I would still give Axis a pass over at this point till really things kind of stabilize. But I think the top three definitely make the grade on the private sector side.
The one that doesn't want to be left out of this party now is IndusInd Bank. Days high on that stock as well. It's a bit of a slow mover compared to the others, but right now it's looking at some handsome gains for itself. Prakash, the other story, I mean, in this market, Infosys, TCS, there's lots of buying happening even as we speak. If you want to take a fresh exposure, then what do you buy? I mean, I'm seeing now Mindtree on the move as well. NIIT Tech refuses to stop.
Yeah, so, if you recall about a week back, I was talking about Infosys. The numbers didn't look very promising because expectations were so high, and the stock closer to 1100, 1120 was definitely something that you could buy into because the expectations have got rationalized. They managed that quite well. And going forward, I think that would probably have a higher delta being created between the current market price and what it could deliver. So that's one. I still believe some of the smaller names like, these are quite small, not in the same league as TCS, HCL Tech, Tech Mahindra and all. But you could look at a Sonata Software, it's unstoppable. You could look at a Persistent, which has kind of come back of sorts in terms of, in spite of that guidance which was weak. So these mid-cap companies could, IT companies could probably be absolutely fine. And don't forget Tata Elxsi, or we saw the numbers, that faith has been reposed by a lot of people who bought into at 1,000, sub-1,000 levels will start feeling that, that has been vindicated, and you would see some more upgrades there as well.
Okay, well, we are all set to closer as we are. By the way, Parag Milk is also declaring numbers today. That stock is ending at the highs. We'll get the numbers tomorrow. But Anuj, expiry has taken us to 10,620. Yeah. Now, what next for this market?
Typical expiry, and on days when, expiry day, you are just meandering till 2:30, be assured of a big move, so to be at 3 p.m. And what this has done is, again, of course, driven by expiry and also earnings from Yes Bank. What this has done is it's given you a bit of a floor to work with. The recent lows, I think this market wants to defend 10,550 on the Nifty. This market wants to defend 24,750, there about 800 on the Bank Nifty. And right now, let's see if the market has enough firepower finally to take out that 10,620, 650 kind of zone, which has been a bit of a resistance. Perhaps it needs a gap up to do that. In terms of stocks, of course, let's talk about the ones which made a big move. Stock of the day today, of course, was Yes Bank, is ending 10.5% higher on that stock, 359 on that. Wow, phenomenal by the end of it. IndusInd was up about 3%. ITC, Infosys, TCS were the other big gainers as far as index stocks are concerned. And you may want to add a Kotak as well, which was higher, of course. On the way down, Bharti Airtel and Bharti Infratel both down quite a bit. In fact, on Infratel, it's not surprising. It gave you that indication yesterday itself after good news was sold into. So that stock down 2.5%, Bharti down 3.5%. Lupin was down 2.5%, Larsen & Toubro, Tata Steel, SBI, Axis Bank ahead of numbers, though it recovered, but still going down with, going home rather, with 1% loss today.
Okay, on mid-caps, there was lots of action actually to speak of. The indexes ended with a gain of almost 80-odd points. Not bad at all for the mid-cap index. Let's get down to stocks. So IT, as we've been discussing, continues to be a theme. You've got NIIT Tech surging 7.5% once again today. What do you say to moves like that? NIIT Tech, let's get that stock up for you. Mindtree has had a good session for itself. We've got smart gains on Mindtree. Looking okay. Tata Elxsi, where the numbers actually look quite okay. The stock has cooled off a little bit, maybe a bit of sell-on news, about 1% lower on Tata Elxsi. Take Solutions up about 3%. A lot of the financials, particularly the small bank / MFI story, that was active in the market today. So AU Small Finance ahead of numbers, 5-6% higher. Equitas has seen some good buying for itself today. Then if you talk about the NBFCs like an Edelweiss, 4.5% on the upside. JM Financials is up about 8% or so. I saw DHFL last time I saw that stock was up about 3%. Let's just see the final close on D1 Housing, so 2% higher. Not a bad day for some of the NBFCs. And then you've got other movers and shakers. Jubilant Foodworks, maybe getting close to the weekend, so thinking pizza, so 3% up on that stock. As we are winding down the session, some of these Mumbai realty counters like DB Realty still had a bit of a spillover from yesterday, 2.5% going there as well. Good numbers from Sterlite Tech, so 2% up on that stock. In fact, speaking of good numbers, should get Supreme Industries, about a 5% up move on that stock. Again, that's a result reaction going for you. Beyond that, if you're talking pure momentum, then the BF twins, BF Investments, 20% for, those who play in this playground. BF Utilities has had a phenomenal session as well, about 8-9% up. Shakti Pumps, very, very strong, 9% up on Shakti Pumps as well. IRB Infra, 3.5% on the upside. So plenty of gainers to speak of. Let me not forget HDFC Standard Life. SBI Life's numbers haven't sparked too much of a firepower on the screen because the stock is down about 1.5%. It was HDFC Standard Life that was seeing the bulk of the buying. Finally, to cap it off with the big losers, the disappointment of the day has to be Syngene because of the issues with the US FDA. That stock's down about 5.5%. Lots of selling on sugar stocks, so DCM, Shriram, Balrampur, Dhampur, most of these stocks 6%, 7%. Sugar once again was a bit of a sour space in the market today. And I'm not even going to bother about stocks like Reliance Naval because we know what's been happening here. Plenty of selling on some of these ADAG names. Let's actually end with PC Jeweler because that's the stock that's been all over the place in the last 24 hours. Final count, down 3.5%.
Okay, yes. Well, that's of course the overall market move. Mitesh, your thoughts on how the day panned out then?
I think, as you rightly highlighted, I'm not sure typical expiry day, the moment happened in the last hour, but I think still, tomorrow could be interesting in the sense that we might finally start getting past those levels of 10,600, 2630. The key here could be the Bank Nifty. It did, end the day with strength, and even the components of the Bank Nifty like Yes Bank, Kotak Bank, HDFC Bank, IndusInd Bank, and possibly some of the smaller names are looking slightly promising on the intraday chart. So if the Bank Nifty could continue its momentum tomorrow, then I think we might have that breakout and a shift of range of about 100 points on the upside. 10,730, 740 is the target which I've been looking for quite some time. Maybe I think, with tomorrow, I think we might get that movement starting on the upside again, which could see those targets being hit.
Prakash Diwan, I'll ask you first. Tomorrow is also RIL day. We'll get the big numbers. Do you think it'll deliver what perhaps this market needs to get that upside breakout?
Well, I think Reliance has been doing much of the heavy lifting in the last week or so, but it's been in fits and starts. But my sense is the numbers will vindicate the kind of move that we've seen, and it could probably start kissing that 1,000 mark eventually, because you have petchem, you have refining, and the geo verticals really contributing or having the potential to contribute. So I'm quite positive. I'm getting into numbers on a very positive note, and my sense is, irrespective of what happens on Monday, probably tomorrow itself the stock could probably see that last leg of an up move and round of confidence.
Okay. And Prakash, Gaba, on the technicals, how convinced are you with this expiry move and, of course, what we've seen from some of the banks today? Call for tomorrow.
I feel that what we saw in the last 6 trading session was some profit booking, A, and B, some kind of shorts in the system that were covered today. we are actually closing on a high note, which is a good sign. So it looks like that our original target of 10,706 is still within reach now. We should get there. Now, if we go there, where does it go from there? If we open the new series on a higher note today, then possibly we can see 10,814 and we 10,910. So there's a very good chance we can see an up move, because there were some shorts, they were covered. There's no profit booking as yet.
In the last 2 years, EPFO has hiked its equity investment to 15%, but now in a move which could have significant impact on all its subscribers, we are given to understand that EPFO's board may soon allow its subscribers to raise their equity exposure beyond that mandated 15%. Not just that, we are also given to understand that this particular proposal may be taken up as early as the next board meeting. Now here's what this very crucial proposal from the EPFO would really mean.
At the moment, the employer and the employee each contribute 12% of the employee's basic salary and dearness allowance as PF investment. So let's consider a total PF investment of 100 rupees a month. That's 50 from the employee and 50 from the employer. Of this 100 rupees, the EPFO invests 15% or 15 rupees in equity ETFs, and the balance 85 rupees is invested in a mix of fixed income instruments. Under the new rules, the employee can choose to increase the ETF exposure to as high as 100%. So for instance, if he or she chooses a 60-40 split, the EPFO will invest 60 rupees of the monthly contribution in equity ETFs and just 40 rupees in fixed income instruments.
Whenever there are global events which are not connected to the Indian markets, the Indian market tends to react, and so FIs also tend to pull out money at such times. So this domestic institutional investor, of which this EPFO contribution will come, will act as a very good support, so that the volatility in the market will come down significantly because of such institutional buying in the domestic flows. Customers are today enamored of equity, and hence they will welcome such a option given by the government saying, hey, do you want to put more allocation to equity because your corpus can grow faster in the long run? I suspect that people will willingly subscribe to the higher proportion of equity.
Wait, it gets better for the employee. So far, the EPFO has decided what returns the contributor gets for his investment at the end of the year. For FY17, that return was 8.65%, which means that for every 100 rupees invested, the employee gets a return of 8 rupees and 65 paise. This amount would not change even if the 15% investment in equity ETFs gave a much higher return of say 17% as it did in FY17. But under the new exit policy ratified by the EPFO board in early April, the returns will be determined by the equity debt split the employee chooses. Let's say the employee chooses a 60-40 split, where 60% of the 100 rupee investment is earmarked for equity ETFs. At the end of the year, he or she will get the full returns delivered by the ETF portfolio and the full returns delivered by the fixed income portion. This means that if the equity ETF gave returns of 25% and fixed income portfolio gave a return of only 10%, the employee's 100 rupee contribution will earn 19 rupees instead of the earlier 8.5 rupees.
Experts I spoke to say that these developments at EPFO are good news for the equity markets as well, as they would lead to a rise in inflows. However, they also point out that the effectiveness of this move will really depend on whether the government gives EPFO investments the same tax benefits as it did earlier. In Mumbai, with Prashant Nair, Yash Jain.
And rubber clearly has been in focus, where we have seen the prices decline to a 17-month lows. The rubber prices in Indian markets actually in last couple of months have gone down by 3.5%. But the global markets have seen further pressure on prices, where Tokyo prices are down by nearly 9% in this year. Well, you also have to take a look at the curbs that the three major producers had been putting, like Malaysia, Indonesia, etc. And that seems to have ended in the first quarter. And post that, there, of course, is a glut situation that the global markets are looking at, and that is weighing onto the Indian markets as well. If you look at the Malaysia prices, they have declined to nearly 92 to 93 rupees per kg, much lower than where the Indian prices stand at around 117 to 119. Between that, in last couple of days is how the rubber prices in India have traded. To understand more about the demand-supply dynamics and where the prices could be headed and the concerns that the rubber industry is facing, We are now joined by MF Vora, who's chairman, Capexil, and former chairman at Rubber Exporters Association of India as well. Mr. Vora, hi, thank you so much for joining us. First of all, what is the sense that you make of the global glut situation? What is the number that Indian markets are looking at in sense of demand and supply, etc.?
Thank you for having me and opening my views. I really don't think there is a glut situation as this seems to be something very momentary.
Okay.
But the entire situation is to be understood in its right perspective. We have to see that the rubber industry, rubber is not the only issue. Natural rubber is not the only issue which makes up the prices. There is a lot of distress as far as various other raw materials are concerned. There are 20 items which go into making a rubber product. But the various other rubber products like carbon black, like zinc oxide, the rubber chemicals, processing oil, processing aids, they are all shooting through the roof, and they're really creating pressure on the rubber industry. That is why you really don't find that the share prices of various rubber industries are going up too much because of various other concerns. But let us talk...
So what you're saying is that the input costs clearly have gone higher when it comes to making rubber as products.
Yes, as products, because natural rubber, yes, that is only one part of the story, which probably forms 25% of the entire rubber matrix. But let us understand one thing very clearly. We produce only 700,000 tons of natural rubber in our country, whereas our requirement is 1.2 million tons. We are making up all the other inputs by importing the material. Now, we are importing it at very high prices because India is the only country which considers natural rubber as an agricultural commodity. I don't know if you can eat natural rubber, but this is how they classify it, and not as an industrial commodity, because if they had to do that, they would have to put the peak rate of duties, which is maximum 10%. But today we are having 25% import duties on natural rubber. Plus, apart from that, there are 10% by way of cost on freight and clearing charges. So this gives them a protection of nearly 35%. The international prices are around 95 rupees per kg. But the Indian prices are about 115 to 120 rupees today. In spite of this, they do not seem to be satisfied, and they want to take up the prices to at least 150 rupees. Now, why is this so? That all the other countries like Vietnam, Malaysia, Indonesia, Thailand, they seem to be making money even at these prices, but we seem to be crying here ourselves hoarse for the prices that we are getting, which is the highest price in the world for natural rubber.
So what according to you is the rubber industry, looking at the rubber product industry for that matter, what are the problems here, and how does it stand really? I mean, you were telling me earlier on how nearly 40% of the rubber product industry really seems to be in distress, seems to be shutting down rather.
Yes, there is a survey that was conducted in 4 states by the Rubber Board, and they have confirmed that 40% of the rubber industry is closing down because it is not viable, as rubber products are being imported into India. There is $2 billion worth of rubber products being imported in India. That is non-tire products only I'm talking about. People are now closing down their factories. Since the import duty on rubber products is between 0 to 10%, they are just doing the rebranding and importing the products and selling it out into the Indian market. So this is not creating the jobs. This is not the Make in India program that we have been talking about. And this is certainly not the ease of doing business.
Your point is well taken, Mr. Vora. One quick final question. Where do you see the rubber prices, though, heading from here at 115 to 120 as we trade right now with the kind of situation we are in? What is your sense on prices?
Now, they are wanting to fix a minimum setting price of natural rubber. Now, is it possible to fix the minimum price of finished goods So that should not be taken at all. And as far as rubber industry is concerned, the Indian rubber industry is very well geared up. We are the fourth largest industry in the world and third largest consumer of natural rubber alone. So that is after China and USA. So we have a very good consumption of natural rubber, but the rubber growers have to look inwards and to find out what the problem and where the problem lies. So unless they do some introspection, this is not going to be a problem. In spite of that, they have been putting all sorts of restrictions. Restrictions on, I've told you about the import duty. They have been talking about port restrictions. They have put a pre-import condition where if I import natural rubber, I have to use that material and export the product within 6 months. It is just impractical to do that.
Clearly, plenty problems and a lot of uncertainties as we are faced by the industry. Mr. Vora, we're completely out of time on this segment. Thank you so much for joining us. Gnanshekhar now joins us to talk about strategies in space. Gnanshekhar, hi. How would you look at the metal space? Because we started on a positive note, but that really seems to be turning around right now.
Yeah, it's kind of mixed right now, Manisha, because you have the dollar at a 3.5-month high. That's sort of putting pressure on almost everything else in the commodity space. Precious metals, base metals, not energy so much, but basically metals. So I think we are in a mixed state at this point in time, coming off from all the sanction news and news flows. The market is gradually edging off because there's no follow through on that. And overall, I think the momentum is gradually moving to the negative side. But, with the overall macroeconomic strength where you see demand growing, you have growth forecasts for each and every country, which is looking quite positive. The demand for, metals is only going to increase. So with the supply side issues to some extent, my feeling is if we drop another 3 to 5% from here, I think a lot of bargain hunting will come in, specifically, metals like copper, which hasn't really taken part in this rally. We'll see a good moment there. The rest of them are having problems with supply. I think whenever prices rise, we see a lot of inventories being delivered in LME. So that also tends to sort of put pressure on the metals right now. But I'm hopeful that any downside from here could be limited.
Point taken. What's also your sense now on the crude oil prices? Because while we have seen that 72 to 75 kind of a range forming for the Brent prices, do you see the range breaking? If yes, then what side?
Yeah, I think obviously on the upside, because what's happening is though the US production is on the rise, you must also notice that the US exports are on the rise because the increase in supplies there. I think the WTI is trading at a discount to Brent, and that's a huge discount, around $5 to $6. So that's encouraging more exports, which I think is quelling more of the supply fears that are happening from the US. So with the Iran sanctions and the Venezuela output problems, all that sentimentally is going to drive prices higher, and funds have just gotten into the long side of the market. So I think we're headed to around 71, 72, which is going to be a tough resistance, and in the domestic market somewhere close to 4,800 or thereabouts.
All right, that's a bull in the house then. Clearly buy calls coming in for metals and energy sector as well. Gnanshekhar, thank you so much for joining us and giving us those strategies. With that, it's out of time on this edition of Closing Bell.